You're listening to Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio.
Check this out just from our own Sarah McBride today. She's venture capital reporter in San Francisco. The value of VC deals in the U.S. last year fell to levels not seen since 2019. This is according to new year-end data from PitchBook. In 2023, VCs invested $170.6 billion in the U.S. last year. That's over an estimated roughly 15,000 deals. That deal value, Tim, down by about 30% from 2022.
It wasn't just the U.S. VC deals also declined globally in 2023. Around the world, it was the lowest outlay for startups since 2017. The big question, Carol, is what does 2024 have in store? So for that, we turn to Jeff Grabow, U.S. venture capital leader for EY. He works both with entrepreneurs and VCs as companies try to scale. So he's got some good insight into what's happening when it comes to money being raised. He joins us on Zoom from Palo Alto, California. Jeff, good to have you back with us. It's actually good to have you back at the beginning of the year because we just got these numbers out from PitchBook, I think today. Not surprising given what we saw, but it was surprising to me that it was lowest since 2019. What's going on with VCs?
Well, so in 2023, we saw the slide that we started in 2022. Fundraising continued to become more challenging throughout the year. And as a result, companies became more defensive, pulled back, were trying to extend their runway. Q4 was off only 5% from Q3. However, as you mentioned, we saw Q4 and 30% down from Q1. One of the interesting things is there is over 50,000 venture-backed startups in the United States. That's a 10x increase from 2004. So that is, we've had, in a lot of the macro environment, things that have happened with low interest rates, cost of starting companies going down, we've had this huge swell at the top of the funnel, and that's going to take some time to unwind.
All right. So then talk to us a little bit more about 2024 and what you're anticipating and where money will go. I'm thinking, we're coming off in a year when you just, whispered the word AI and everybody got kind of excited. Our team has looked at a lot of Wall Street research, over 600 reports and counting. And one of the things that keeps popping up in terms of what's on Wall Street's mind is AI again in 2024. So what about venture money going into artificial intelligence specifically?
Well, in 2024, we expect to see more companies come to market for a couple of reasons. A lot of companies haven't raised since 2021, and they need more capital. Second, VCs have done a lot of work on their portfolio companies, so they're actually available and have time and are eager to do new deals because they do have plenty of capital available to do new deals. As it relates to AI, without AI in 2023, the numbers would have been starkly different. We expect to see capital continue to flow in AI in 2024. However, I think you might find people to be slightly more cautious than we've seen. It's interesting, the question around where do platforms end and extensions begin. The technology is moving extremely rapidly, and that's and impacting business models as that happens. We believe that AI is a transformational technology, but it's the early innings, and I think that it's probably overhyped in the near term and underhyped in the long term.
Talk a little bit about what you mean by that, because it's interesting. We talked about this with regard to Microsoft a little earlier, and it's like Microsoft is
they're adding a new button to the keyboard.
But it's an incredible company because think about all the different iterations of Microsoft that have existed.
Yeah.
And this is a company that wasn't quite left for dead, but when regulators tried to dismantle it, 2 decades ago, it actually paved the way for a lot of the startups and big companies that we talk about now to exist, right? In social media, like Meta platforms / Facebook. But now it's leaning so hard into AI with a $13 billion commitment to OpenAI. And now, the keyboard thing is actually a big deal that they're adding the first new button to a keyboard in
speaks to commitment, right?
30 years at this point.
Yeah. They are obviously laying it out and saying how important it is.
So how important is this in the long term then, Jeff? Because if we're underestimating the hype in the long term, like what does that world look like?
Well, it's going to be fascinating to see it evolve, but and I just think about how it potentially impacts our business. We are actively looking at how AI impacts our business operations. And you would not think a professional services firm would be dabbling in AI, yet we've got a significant commitment to taking a look at technology, leveraging it for the benefit of our operations as well as our clients. And I think it's going to impact a lot of verticals. I don't think there's going to be an industry you can think of that's not going to be impacted to some degree by AI, once the pen's put down and the story is written.
Draw that out a little bit. What are you guys specifically, when you look at AI, generative AI, and how it might impact your business? What specifically?
Well, I mean, it's situations around how we perform services for our clients, whether it be a test services or situations helping our clients solve business problems. We've got a business that spans a lot of different verticals, and we're on the lookout to figure out how we can take advantage of that and make the most of it.
Is it going to replace people?
That's hard to tell. I mean, I'm not an expert on that, but I think it's going to help drive efficiency. And hopefully, I think there will probably always be a human in the loop.
So it's so funny. This is going to be the weirdest thing I'm talking about all day, but I went to the dentist earlier this week.
I'll be the judge of that.
And one thing that I noticed about being at the dentist was it literally took her 8 minutes to clean my teeth, because they use these, it sounds like a drill, but it's like, these electronic whirring buzzer things now.
Yeah.
And back, not so long ago, they used to actually have to manually scrape your teeth, and it would take like a half hour, 40 minutes. And she made a good point to me. She's like, well, when you electrify these things, when you add technology, like, you used to have to spend all day washing clothes, but you throw them in the washing machine. And it made me think about the productivity that was gained elsewhere as a result of these technological advancements. Those were big ones that happened during the Industrial Revolution, right? Do you see those technological advancements happening as a result of AI, Jeff, that we actually increase productivity because we're not doing the menial tasks that many people do day in and day out?
I think, long term, it's going to help raise people up in terms of being able to bring some more mundane things around pattern recognition. Thinking about the dentist example, can they immediately, take a look at your teeth through a screen and identify exactly where it needs to be cleaned? And so, all of a sudden it takes it down from a 30-minute situation to, under 10. And can they spend more time doing other things for you and being, more around preventative dental care and other types of things? So, it's early. This is, we're speculating into the future. I think, venture is going to have a significant role to play in this, and we're excited to see where it goes. And I think there's great opportunities for entrepreneurs who have domain expertise to figure out how to take advantage of this technology and, bring some of this to life.
Jeff, real quickly, 20 seconds, anything that you're seeing in the VC cycle or trends in this start of the new year that says recession to you or significant slowdown?
Well, I think it's going to be interesting to see where we end up in 2024. I think I mentioned the overhang of the venture-backed companies. That's a lot to work through. But we haven't seen a down cycle in quite some time. And so we're going to have to work through that. But people have seen this story before, and the old, VCs, we'll talk about this, how they love to put money to work in more challenging times, just because expectations are more realistic, and everybody has a different view of the world than we've had recently.
You get some of the fluff out of the market, right? When it's more discriminating, if you will. Hey, Jeff, thank you so much. Happy New Year. Jeff Grabow, he's U.S. venture capital leader for EY, joining us on Zoom from Palo Alto, California, as we mentioned earlier, working both with entrepreneurs and VCs. I want to know about this dentist. What was it?
When they clean your teeth, they don't use an electric thing. They still scrape with like a mirror and like that wire thing.
Yeah, they do.
No, they don't do this at this dentist I go to.
What is it?
It's you plug it in and you put a little drill bit on it and it cleans everything off.
Huh.
It was so quick. I was like, are you done with the top too?
So they don't do it at all?
No.
All right, we got more to talk about.